Sure.
So just more information, just looking at S&P CoreLogic, the Case-Schiller National Home Price Index. Again, this is the index that tracks kind of national home prices. 1 year, 20.5% return.
Yeah, and if you look at the 5-year or 10-year, you really see that that the growth in the home prices has really continued at the same level that began since the early days of the pandemic. This is interesting, and this is from National Association of Realtors. They home sales actually are down 3.9%, which marks 6 consecutive months of decline and the slowest pace in nearly a decade in terms of home sales. And that's for factors that we've talked about just now. It's like buyers, maybe they're not interested in selling, but when that balance maybe come from sellers aren't interested in selling.
But if there's no homes, because there's no home, sellers aren't interested in selling, and then there's just no homes to buy, and so it's not necessarily saying that demand is low as much as supply. It could be demand also, but I think it's more supply. Oriented.
Oh, I think so too. And it's creating, it's kind of tightening that nozzle and keeping demand high because there's just less to go around, and that makes sense a little. I still think there may be cracks, but we'll see. And I think that the home prices are a little bit of a lagging indicator.
Yeah, for sure. Because it's such an emotional decision.
Yep.
People, even though it's like the largest financial decision people make, people like throw common sense, and there's like, I don't care what I can afford. I want this house. I want this school district. I want this neighborhood.
Well, and I think it's huge psychological thing is what you mentioned before is, last year they were seeing this white hot growing housing market. They have that number in their head like, oh yeah, I want, people, I need to sell my house when people are going to clamor for it and, and sell right that day for 20% above asking price. They don't want to enter a market, and who would, that's a little less, maybe we'll still make a money, but
it's still obviously, again, like prices are still up, but it's a little choppier than it was a couple months ago. I mean, we've seen on the multifamily market, it turned not to a full-on buyer's market, but it went from an extreme seller's market to slightly more balance.
Yeah, more rationality.
More rationality. Prices are still up. Cap rates have come off their incredible lows, and people aren't there was just a lot of reaching going on, and people buyers meeting the reach. We're seeing less reaching because less driven by emotions, more driven by, returns and actual, financial analysis. But, we're seeing terms become much more reasonable than they were, and really an attractive buying environment. Now, there's still some prices, and there's still some sellers that have an idea that I'm going to get X for it. And I think high quality assets and great locations are still going to be commanding a decent premium. Yeah. Because there's a flight to quality. There, where else are you going to put your money right now? Real assets in an inflationary environment, it's kind of a textbook strategy in move is, again, looking for income, looking for value, and high quality value. Though.
And I think there's a good, from in terms of investor demand, there's a good reason to think that multifamily could weather a hit to the housing market in general because of investors realizing, okay, this is an environment where, hard assets are great, but housing maybe a little bit less. Now, there is institutional buyers and investors in single family homes, but that's not nearly the environment of investment multifamily properties.
Yeah. No, it's a good point. All right, let's just pop on again. Looking at pending home sales, we're down a little bit, down about 4%. Is this month over month? Or this is what you were just saying? Over the last 6 consecutive months. It's not necessarily demand driven, although I think you're right, Matt. I think we are seeing some cracks.
And the Marcus and Millichap really outlines this, and I think that there's some interesting, even the little small graph that they had on the article was interesting and a little bit revealing, as you could say.
Home purchases continue to slide, but prices keep rising.
Home buying, and this is just the beginning paragraph, and I'd almost like to break it down here. So they say home buying has cooled off significantly, with the overall sales volume shrinking by 15% between January and April 2022, directly correlated to the recent mortgage rate surge. higher borrowing costs are weighing on buying activity, supporting an increase in available inventory. So, like I said, this lead sentence says so much here. Lead paragraph, whatever. First, a full 15% slowdown in home buying in 4 months is huge, especially since January is not a big home buying month compared to April. Second, it nails down the reason without any wiggle room as directly correlated to the recent mortgage rate surge. And third is their very suggestive phrase, supporting an increase in available inventory. That's kind of the logical conclusion where I found myself after reading about the declining home sales and still elevated home prices, because as we saw in the Case-Schiller, home prices haven't gone down, not even month over month. Yes, home prices are a lagging indicator, but I also think that the changing interest rate environment, like we said, it has made some sellers less likely to sell. Yeah. Marcus and Millichap does note that significantly, the amount of home listings has ticked upward since last month, which makes sense because it's the right time of year for homes to be listed.
I was going to say, we're just looking at this chart that Marcus Millichap has. I mean, the similar thing happened last year in 21 also. I mean, kind of the first quarter and a half, it was relatively flat, and then home listings, bumped up, home sales increased after that, and then they did a sharp decline. And now we're kind of seeing kind of a seasonal bump, a very seasonal bump as well. And I would say, I think it's definitely, there has to be a correlation to interest rates, no doubt. But it's also pretty well kind of tracking home listings to sales. I mean, it's kind of a similar trend downward.
And that's what I was thinking. This is kind of interesting, is that home sales were underneath home listings for quite some time before the pandemic. And it's only been since the middle of 2020 where home sales have outpaced home listings.
That's a good point.
And so I think that it could be, that kind of return, and it wouldn't be abnormal if things shifted back to home listings home listings as more than home sales. I think that also this is another figure that I found out here, is that even with the declining home sales and rising listings, the average time a home spends on the market is 34 days, which is lower than any time in the past 6 years. Wow. So even with all of this stuff, and again, these trends
are moving.
Yeah, we're in an intermediate phase, and that time on the market could expand. Yeah. But we are lower than we've ever been, at least lower than the measurement that I found on the Fred website. But yeah, 34 days. That's not so long.
No, that's not long at all.
And just to end here is where I was leading, and especially with that last sentence there, or that last phrase, is this supporting an increase in available inventory. It really comes back to, if sellers aren't selling, then where can we get these new houses? And it has to be through building more of them. And even then, the mortgage rate environment is making builders a little bit more reticent. So it'll be interesting. I still think that the biggest movement will come from constructing new supply.